Is America barreling towards a recession? According to the Moody's Analytics chief economist, the answer may be yes, saying 22 states and Washington, D.C. are either at risk or already in a recession. They account for nearly a third of the national GDP. And he says while the national economy isn't there quite yet, it's, quote, clearly losing steam. News Nation's Alicia Nieves has been crunching the numbers for us. Good morning, Alicia. Just how real are these recession concerns?
They're very real, Hannah. I mean, we're starting to see unofficial recessions indicators flash, and they're flashing bright reds. Many Americans, even many on Wall Street, are focusing on them because we're in the middle of this federal data blackout thanks to the government shutdown. So it's the only thing we have to look at right now. The clearest indicator of a slowdown is coming via overdue car payments. Right now, 6.5% of subprime borrowers, those with credit scores below 670, or at least 60 days late on their car loans. This is according to Fitch Ratings. That's actually worse than any point during the past 3 recessions. You're talking the COVID pandemic, the Great Recession, or even the dot-com bust. And we're seeing cars repossessed at the highest rate since 2008 and 2009. Now, we're also seeing a pawn shop indicator where pawn shop operators are reporting a boom in lending. First Cash, the largest pawn company in the country, says same-store pawn loans, those are up at the end of June 13% from the year prior, while Easy Corp, which runs hundreds of pawn stores across the country, said loans outstanding, those rose 11% in the last quarter, up to more than $291 million. And this one's really interesting, kind of a newer one. GoFundMe, that crowdfunding application, the CEO recently told Yahoo Finance that there has been an increase in users launching campaigns to pay for a category they call essential, things like car notes or even groceries. Now, typically, it's important to have context here. These unofficial indicators are always just warnings of an economic downturn. We usually pair them with government's economic data, the gold standard, and that really helps us gauge how close or even how far we are to a downturn. But as I mentioned a moment ago, without the government being open, we don't have that data. So we're missing real critical context, and all we're seeing is these red light flashing warnings of a potential slowdown.
Yeah, you've been reporting on this all week.